Hey guys, what's up and welcome to a new Tesla update video. So today, as usual, let's go over Tesla, let's go over the market, let's discuss what has happened so far, what we can expect moving forward, because we have a pretty important moving forward situation happening here. Yeah, let's just discuss all of that stuff as usual. If you enjoy, don't forget to hit that like button. It does help a lot. This is not financial advice. I am not a financial advisor. Make your own decisions, do your own research, and my membership section is live. The link is down below if you're interested in joining. $2.99 a month, $2.99 a month, and you essentially get access to all my intraday thoughts. I give you guys updates on Tesla as it's moving throughout the day, live essentially, and anything that's important. But all that being said, jumping right into it, the market's closing in just a few seconds here. Tesla looking like it will be actually green on the day, up about 1.7% or so, closing at almost $262 per share, which compared to the market, you can argue is an ever so slight underperformance, but I wouldn't, it's nothing too completely crazy or too major. So what is going to happen moving forward? This is where it gets a little bit difficult. Let's put eye drops in my eyes. My eyes are a little watery, but this is where, in my opinion, it gets a little bit awkward almost, right? A little bit difficult, a little bit hard to read. And the reason is quite simple. First and foremost, we're still in a bit of a weird limbo land. And I'll explain what I mean by that. Now, this is one of those scenarios where I'm not extremely confident which side is going to win. Also because, in my opinion, it also hinges on the delivery numbers coming out on Sunday for Tesla. But I did open up a position pretty much right before I started recording. I'll quickly explain what I did. Very light position, but nonetheless a somewhat bullish position. But yeah, anyway, so as we discussed the other day, Tesla was arguably in this little bull flag that, 1, 2, 3, only 3 touch points, which I find very strange, but only 3 touch points that Tesla was in this bull flag. And it did essentially, it quite literally broke out, right? We had a lot of congestion happening over here. Then we kind of broke out, kind of retested it a couple of times more or less here. And then we did officially break out. And then today we're getting a bit of that follow through. So that's the bullish pattern, right? On the flip side, however, we still have potentially that handle on the cup and handle forming, which again this is the cup. And this is the handle. This handle is starting to get a little overextended, which is why this is pretty much the last chance, in my opinion, the bears have, at least for this formation, for this pattern, to reject. And so far, they are coming in, right? Because again, we did break above the 0.5 level, which was important, which is great, which is why we got this nice little move up, right, from this area, congestion period, right? But we are, as you can see, let's say go to the 4-hour, pretty much getting rejected right at the next level, the 0.618, which is pretty much the final level of the Fibonacci retracement for this to still be considered a corrective bounce from this drop. So this is the main, crash out or whatever you want to call it, crash, drop, correction. This is the dead cat bounce, which is still technically valid because we are closing below the 263 level, right? So for instance, you can look at it like this, bit of a, not the best looking daily candle. We'll discuss that as well. Right, but this is the last chance that the bears have in order to continue this downtrend, right? Because if we break above this, right, it's not like we're just gonna go rocket to the moon, all-time highs. We're still gonna go up, potentially get rejected, probably have some downturn regardless. Like it's still gonna obviously have downturns, but in order to prevent the downturn to go lower than this, the bears, in order for the downturn to go lower than this low that we had over here around 240, the bears absolutely want to reject right at this 263 to 265 level. This is their last chance, in my opinion, for Tesla to still go one more leg overall lower, maybe like in July or something like that, right? So that's extremely important. If they don't, and let's say Tesla does rocket past this, I still think obviously it'll find rejection up here, it'll still come down. I just think that at that point, its correction or whatever, like the retracement after the rally, let's say, assuming it does, will be less severe than assuming it rejects straight up from here and then moves downwards, right? So in other words, this is the bears' last chance to really defend this, to really get an actual move to the downside. While the bulls really do want to break above this, right? So that's the main thing I'm looking at, right? And this cup, you can see the handle of the cup is still holding true, right? And this is also, on top of that, what I just mentioned, this is also the last level that I would consider this handle to still be a valid handle of the cup and handle pattern before the handle gets just simply too extended to where it breaches way too deep into the cup, right? And it pretty much no longer is valid anymore because it's just, it can't go pretty much to the bottom of the cup, in this case the bottom with the cup being inverted, right, being all the way up here. That just doesn't make sense, right? So a crucial area. This is like such a vital area, and I've been talking about 265 as being my most important level for the bulls to break and for the bears to defend, right? Extremely important level, because on top of everything else I just said, of course, if we do break above 265, it officially has set a higher high on this so far downtrend that is so far setting lower lows and lower highs. That would break that trend, and that would, in my opinion, start flipping it bullish. So instead of, for instance, one option, the bearish option would be like we reject here and we do set a lower high, because we are still technically lower than the high that we set here, right? So this is this is the high, this is the low, then we set up a high right around here, right? This candle right here, can't even circle, right? And then we went lower, set a lower low, and now we're potentially setting a lower high, because we are technically lower than this high over here. However, if let's say Tesla comes up to, as an example, let's say 270, and it goes up to here before rejecting, this now officially broke this higher this high right here. So it officially set a higher high, which breaks this kind of descending trend, right? And that will be pretty good for the bulls and pretty bad for the bears, because if we do reject here and we don't go any higher, for instance, right, then this opens up the possibility that we're still, technically in the downtrend, and we can still set another lower low, right? So again, lower high, lower low, lower high, lower low, and you keep doing that until one of those trends breaks, until you either set a higher low or a higher high, right? That's why it's really important for, in my opinion, to break 265 in order to kind of break that trend and then start setting up, again, potentially a higher high here, and then we come down, maybe set a lower high over here, or sorry, a higher low over here, and then we kind of move up from that, and then we go back up again. You know what I mean? So that's kind of the two options, right? Either we do like this, or we reject here and then we just go straight down like this and go here instead. You know what I mean? I hope that makes sense. I hope that maybe that was confusing, I'm not sure. Hopefully that made sense, right? But that's kind of the way I'm looking at it right now. The next thing that's really important to understand, which we'll go to very soon on the QQQ, is that, again, Tesla, of course, the QQQ, the market, the general broader market, of course, affects Tesla. Usually, not always, but more often than not, it will affect Tesla. But before we get into that, which is similar to what I'll be talking about when I do get into it, is of course the RSIs, right? You can see we're still pretty much at these pretty elevated levels over here, while the RSI is meaningfully lower than these levels up here. You know what I mean? Like, we're not far from these levels that the RSI was sitting at pretty much 90, while the RSI right now is sitting at like 65, even though we're not that far from these levels. Like, my cat's trying to jump on my thing. I don't want her jumping on the table. Right, so that's important to understand, right? The RSI is definitely showing some, some slight signs of bearish divergences here, right? Which is definitely something that you want to be taking into consideration. So, you want to be a little bit careful with that, because if we jump over to the QQQ, for instance, very quickly on the daily, you can see we are once again getting rejected by that major 370 level that I talked about way back when we were still over here. We came up, got rejected by a pretty severe rejection up here as well, and then moved our way down, and now we came right back up to it. But the thing that sucks here is the fact that it is, of course, also setting up a bearish divergence, because we're pretty much closing right at the same level as this candle, like 1 point off, which is like nothing, but the RSI is meaningfully lower, right? This was that close right there in 370 for the first time that we talked about just now, and this is today's close, pretty much at the exact same level, off by half a point or so. Meaningfully lower, even though the stock, or I guess QQQ, is pretty much at the same level. You know what I mean? That right there is a bearish divergence, and especially if it goes even higher while the RSI doesn't, that's also an even more so of a bearish divergence. So, SPY is doing the same thing as well. It's actually technically closing higher than those levels. Our RSI, of course, is lower. So, another thing to consider there, right? So you got some pretty, not the best things setting up right here for the bulls. Some caution signs, in my opinion, showing up over here. So you want to be a little bit careful with that, in mind, I guess, is what I'm trying to say. So that's kind of what I am seeing. And again, if we do, assuming reject from this level and do start making our way down and trending downwards throughout July, for instance, to say delivery was a miss, or it's just a sell the news event, or whatever the case may be, again, main thing I'm looking for is 234 gap fill, which I'm sure everyone's looking, but I actually wouldn't be surprised if we actually overshoot that a little bit and come down into the 230, potentially even 220s area before basing there and probably bouncing overall from that area. Now, the final thing I want to mention is the fact that back on the QQQ very quickly, if we go back to, let's say, the 4 hour, we are potentially setting up a double top situation here, right? Where we came back up, came down, and now we came up to the same level, 2 double top formations, and potentially moving our way down from there. SPY, very similar situation, and Tesla, not really the same, but if it does come up to around 375, it will, of course, do the same rough pattern right around here. So, another little bit of caution there as well. So just keep that in mind. On top of that, again, as if that wasn't enough, we are, of course, still extremely close to this red line, which we already kind of rejected at very loosely right here. You can see when we were at 376 not too long ago. And again, that red line is right above us, right? It's not that much higher, right? So that's something else to consider, right? Can we just continue breaking through it right now? I'd be a little bit surprised with how much Tesla has already ran in just a short amount of time frame, that it has, you know, steam in it to really break through this without getting an actual true breather. Because to me, this isn't really a good breather. This is like a very mini breather, a mini cool down, right? So, you know, it's just something about this doesn't scream that it has the momentum. But again, with this stock, you never know. And in my opinion, it really comes down to the delivery number on the weekend. So that's kind of what I am seeing right now, right? So just it really comes down to that number on Sunday, in my opinion. Now, the final thing I'll mention very quickly is, of course, like I said, I did open up a very small position, very light position from, you know, relative to my portfolio. But, you know, I did buy shares. Then I instantly sold call against those shares, pretty much right at market close, or like right before I started recording. And then essentially what that means is as follows. And I'll kind of explain my thought process as someone that likes to trade, not super risky anymore, not because I don't really need to. That's just my personal financial situation. I don't need to be very risky, right? I don't need 1000% gains, right? I can easily make with substantially smaller gains, but again, it's all percentage based, right? And I'm perfectly happy with that. Just based on my personal situation, my personal financial situation, right? All that, of course, everyone has their own situations and, you know, tactics, I guess, if you will. But the reason I did that is because, again, if you buy shares here, and I sold a 265 call for next Friday. And the reason I did that is because, number one, Monday is like a half day. Tuesday, I believe, is just completely off for the market as well, for the American markets, right? Because it's the 4th of July. So it's a very short week next week. So that's good for me as a sold option, as for selling options, because it works in my favor. Because the theta just ticks away even during those days that the market is closed, right? So it's beneficial in that sense. But the reason I did it also is because if Tesla deliveries come in, and let's say nothing happens, let's say Tesla doesn't do anything, let's say it just goes sideways in this range, right? Because the option that I sold was worth almost $8 for simplicity's sake. Pretty much as long as Tesla from the price that I bought is dances within $8 plus or minus roughly, I'm pretty much chilling, you know what I mean? More or less chilling, and I overall make money on that. So essentially, if it goes sideways, the call just expires or decays rather, and then I slowly make money on that. I can buy back whenever I want, and I just sell the shares, and that difference is the profit, right? If it rockets from here, I make the difference from what the shares that I bought up to 265, so I make that money. Plus, of course, I keep the premium, so that's a win for me as well. The technically lose scenarios, if Tesla completely and utterly crashes, pretty much down below like 255, I think roughly, which is exactly where this level lines up, which happens to work out pretty nicely, this massive support area. So if it crashes below this level, then, you know, that's unfortunate. Then I do actually start losing on that trade overall, right? I no longer am net positive on that trade. But the reason I'm okay with it is because, again, it's a very light position. I am still substantially cash. Well, obviously, I'm going in and out right now. I'm just scalping the Tesla, right? I entered a bunch over here, then I sold a bunch, a bit of here, and then the rest of it here. And then I did enter that trade just now here, right? But the point is the fact that if it does crash and it goes to, let's say, you know, 250 or like, you know, 240 or even 230, right? This trade will hurt a little bit, and I will probably exit it with still a loss. However, the reason I'm okay with it is because if it does go to those levels, I'm perfectly fine now really starting to buy that dip, and it will pretty much eliminate this average entirely, because my main average will be just pretty much down here now. You know what I mean? So that risk versus reward to me kind of makes sense. If it goes up, I make money. If it goes sideways, I make money. If it goes down, I lose money on this trade, but I get to buy the dip finally that I've been, you know, waiting for, hopefully down here. So that's the way I'm looking at it, and the risk there and versus the reward kind of just makes sense to me. So I'm okay with that. But that's my explanation behind that trade. Let me know what you guys think down below. Thank you all so much for watching, and I'll see you tomorrow. Peace.